Mastering market direction. Navigating financial markets requires understanding market direction. This presentation offers a structured approach. It covers price action, moving averages, and sentiment analysis. Price action and trend analysis. Uptrend, bullish. Higher highs and higher lows signal a bullish trend. Investors are willing to buy at increasing prices. Downtrend, bearish. Lower highs and lower lows indicate a bearish trend. Sellers are dominating, pushing prices down. Sideways movement suggests a range-bound market. Consolidation occurs with no clear direction. Moving averages, identifying trend shifts. Golden cross, short-term MA crosses above long-term MA, indicating a bullish signal. Price above MAs, prices trading above both 50-day and 200-day MAs. Bullish trend, confirms upward momentum and investor confidence. Market breadth indicators, gauging participation, advance, decline line. More advancing stocks than declining stocks suggests broad bullish participation. New highs versus new lows. Dominance of new highs over new lows points to sustained upward momentum. Bearish trend. More declining stocks than advancing stocks suggest broad bearish participation. Technical indicators, momentum and reversal signals, RSI, relative strength index, over 70 indicates overbought, below 30 suggests oversold conditions, signaling possible reversals. MACD, a bullish crossover signals upward momentum, while a bearish crossover signals downward pressure. Bollinger Bands, price nearing upper band suggests overbought, nearing lower band suggests oversold conditions. Volume analysis, confirming trend. Strength, rising volume, increasing volume with rising price confirms a strong uptrend. Falling volume, increasing volume with falling price confirms a strong downtrend. Low volume suggests a weak trend, increasing the possibility of reversal. Market sentiment, gauging investor psychology, VIX, volatility index. High VIX indicates fear, bearish. Low VIX indicates confidence, bullish. Put-call ratio, higher ratio signals bearish sentiment, lower ratio signals bullish sentiment. Economic and global factors, influencing market trends, interest rates. Rising rates often lead to bearish markets. Falling rates can stimulate bullish trends. Inflation data, high inflation can trigger bearish reactions. Stable inflation supports bullish sentiment. Geopolitical events, wars, elections, and trade policies significantly impact market directions.